Bank Negara menaikkan kadar dasar semalaman OPR sebanyak 25 mata asas kepada 2.5% hari ini. Ini kenaikan kali ketiga berturut-turut sepanjang tahun ini dan pertama sejak 2010.
Pada kadar OPR semasa, Bank Negara berpendirian dasar monitori kekal akomodatif dan menyokong pertumbuhan ekonomi.
Assalamualaikum and hi, my name is Adam Ukail bin Ajizan. What is OPR? OPR is the interest rate or profit rate at which a bank lends to receive from investment with another bank. OPR is determined by Bank Negara Malaysia in the Monetary Policy Committee meeting MPC held throughout the year. OPR changes will directly influence the bank interest rate, BLR, base lending rate, BFR, base financing rate to the bank. The OPR is an overnight interest rate set by BNM. What is monetary policy? Monetary policy is a set of tools used by a nation's central bank to control the overall money supply and promote economic growth, and employ strategies such as revising interest rates and changing bank reserve requirements. First, monetary policy is a set of action to control a nation's overall money supply and achieve economic growth. Second, monetary policy strategies include revising interest rates and changing bank reserve requirements. Number 3, monetary policy is commonly classified as either expansionary or contractionary. Lastly, the Federal Reserve commonly uses 3 strategies for monetary policy, including reserve requirement, the discount rate, and open market operations.
Assalamualaikum and hi, my name is Muhammad Haikal bin Haja Muhyiddin. Bank Negara Malaysia (BNM) decide to the once rise again to the overnight policy rate OPR the years was made based on a number of factors currently occurring in the national economy. Putra Business School UPM Economy Analyst Associate Prof. Dr. Ahmed Razman Abdul Latif say when the OPR is increased, the cost of borrowing will increase and spending by individual and businesses will decrease as they will more inclined to the save. This will cause demand to be less than supply, thusing the inflation rate. So the OPR is expected to rise 25 basic point to 2.25% in July and 2.5% this September. Taking into account the increase in the inflation rate at 2.8% in May and also the increase in interest rate in the US. So the Monetary Policy Committee MPC of the Central Bank today decide to raise the OPR, which is the benchmark for the loan and saving, by 25 basic point or 0.25% to 2.25%. It is the second consecutive increase this year after BNM raised the OPR by 25 basic point to 2.0% during its last meeting last May. Committee Father Ahmad Razman say although the OPR will be increased to a higher rate, it is a lower than the rate before the pandemic, which is around 3.00 to 3.25%. Therefore, it still do not really burden borrow, especially to B14 group. So, however, bank, especially Islamic banking, should taking the initiative under the concept of Makisah Syariat not to be increased the profit rate charged to their customer, even if the OPR will be increased. So this is to prove the community that Islamic banking was not established to obtain the highest possible profit, but as a financial alternative for Muslim that will be not burden them, especially in uncertain economic environment. Universiti Utara Malaysia Economy Analyst SST Prof. Dr. Irwan Shah Zainal Abidin say, from a monetary policy perspective, BNM decide envelope issue to the manage expected inflation pressure, manage the movement of foreign capital and control the value of the ringgit. He, however, said the increase in OPR should be done carefully so as not to be affect the growth momentum of Malaysia economy this year, which is expected to grow at a rate of 5.3 to 6.3%. Nonetheless, what is a worry is the immediate effect of this OPR increase on the people, as they feel further increase the burden on their life with the increase in loan costs. Ultimately, the cost of living problem they are facing today will get worse. So the additional cash assistance provided to the Bantuan Keluarga Malaysia (BKM) will apparently be channeled to bank to cover the increase in loan costs as a result of this 25 basis point increase in OPR. Similarly to those who have a start to their stomach or have a made saving in spending, this additional saving have to be channeled to the bank due to the increase in loan costs. Adding the certain industries such as automotive and real estate are also expected to receive negative effect from the latest action from BNM.
The reason of the increase in interest rate of overnight policy rate (OPR). For the household, when the interest rate increase, this causes the loan cost to rise. Household debt burden will increase, and it is also increase the cost of living. Then the amount of loan that should be borrowed also reduce. In addition, people's purchasing power also decrease because consumer will avoid using credit card payment. Therefore, the spending pattern when the OPR increase will limit consumer spending. Finally, supply and aggregate demand also decrease due to the increase in interest rate. When the interest rate in OPR increase, this causes the borrowing cost will increase. Then, the amount of loan that should be borrowed will reduce. In addition, the firm's financial capital will also decrease because the firm does not need to issue more capital for that. Therefore, firms can expand operations during the interest OPR increase because most firms will limit and reduce investments. In addition, aggregate investment also decrease due to the increase in interest rate. Finally, the productivity rate will be low due to the lack of competitiveness between firms.
On a day-to-day basis, banks tend to have changed level of cash reserve, dependent upon the bank's lending activity and the deposit and withdrawal of its customer. Taking on a loan after the OPR increase will cost more for Malaysian consumer because of the increase in the loan interest rate. So, buying a car will then cost more, and servicing an existing housing loan may also cost more as the interest rate has gone up. So, the result are higher monthly installment payment and longer loan tenure. Thank you.